Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within the financial world. And today we are looking at Hyperscale Data Incorporated filing, which seems to have some really interesting developments around their stock issuance and why they are doing it. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. And if you want to dive deeper into financial analysis and chat with us, join our Discord community linked in the description below. We're talking about how a company manages its stock, what that means for investors, and how these seemingly small changes can actually point to bigger moves. So we have a report dated the 31st of October 2025, and it touches on a few things. For Hyperscale Data Incorporated, it looks like they have been busy issuing new shares of their class of common stock. This isn't just a random event. Companies issue stock for a variety of reasons, and usually it points to something specific they are trying to achieve. First up, they mentioned issuing 10 shares of Class A common stock from the conversion of Class B shares. This is a small number, indicating a minor shift potentially among early investors or internal structure adjustments. Then we see a much larger issuance of 7.5 million shares of Class A common stock. This came from converting 3,000 shares of their series. B convertible preferred stock is like a middle ground between bonds and common stock. When it converts, it means those preferred shareholders are now becoming common shareholders, which can dilute the ownership percentage of existing common shareholders. And to raise more, another 2.5 million shares of Class A stock were issued to pay off $1 million worth of a convertible note. Convertible notes are debts that can be turned into stock. So essentially they owed money, and instead of paying cash, they issued stock. This is a common tactic when a company might want to conserve cash. Now, this next part is key. They sold these shares using an exemption from registration. This usually means they were sold to sophisticated investors who are assumed to be able to do their own due diligence rather than the general public. So by the end of October, they had over 323 million shares of Class A common stock out there. That's a lot of stock, and these recent issuances, especially the ones from convertible notes and preferred stock, are significant. They are essentially increasing the total number of shares in circulation, which can impact the stock price per share if the company's value doesn't grow proportionally. Hyperscale Data Incorporated has two main types of stock listed on the NYSE American Exchange. They have their Class A common stock, which trades under the ticker symbol GPUs. Then they have their 13.00% Series D cumulative redeemable perpetual preferred stock, which trades under GPUs PD. This tells us about their main securities. The Class A common stock with a par value of 0.001 is a regular stock. The Series D preferred stock is a bit more complex. It has a fixed dividend rate of 13%. It is cumulative, meaning if they miss a dividend, it gets added up. Redeemable, which means the company can buy it back. And perpetual, meaning it doesn't have a maturity date. This line specifically mentions their common stock with a par value of just 0.001. Par value is a nominal value assigned to a share of stock, often very low, and it doesn't reflect the market price. And this one points to the Series D preferred stock, again with that very low par value. The key takeaway here is they have common stock and a specific type of preferred stock outstanding that has contractual obligations like dividend payments. The ISO 4217 USD here confirms that the currency in play for these financial dealings is the US dollar, and XBRB shares is a technical tag essentially confirming that these figures relate to the number of shares. Looking at the overall picture from this filing, Hyperscale Data Incorporated seems to be actively managing its capital structure by converting debt and preferred stock into common stock during October. The large number of shares issued from convertible notes and preferred stock suggests the company may be prioritizing cash preservation over dilution for certain types of investors. This could indicate they have significant cash needs for operations, growth initiatives, or to manage existing debt obligations. The use of registration exemptions points to dealing with a specific set of investors, often more familiar with the company's situation. What's interesting is that while they are issuing shares, the filing doesn't provide a deep dive into the financials for this period. We don't see revenue growth or profit figures here. But the stock activity hints at underlying financial strategies. The big question is whether these stock issuances are a sign of strategic growth where they are funding future endeavors, or if they are a sign of financial strain where they are converting debt because cash is tight. Without the full financial statements in this particular excerpt, it is hard to say definitively, but the pattern of converting debt and preferred stock is a common one when companies are looking to manage their immediate cash flow challenges. So, what is my take on this? Hyperscale Data Incorporated is navigating a period of significant capital movement on one hand, They are structuring their liabilities by converting them into equity, which can be a smart move to reduce immediate debt service pressure. However, substantial issuance of new shares, particularly from convertible instruments, will inevitably dilute existing shareholders' ownership percentages. This means each shareholder will own a smaller piece of the company unless the company's overall value increases at a faster rate. The key risk here is that if the company doesn't generate substantial growth or profitability to justify this increased share count, the per share value could suffer. The opportunity lies in how effectively management deploys the capital that these conversions might be freeing up, or the strategic advantages of bringing in new owners through these conversions. It's a tightrope walk between managing immediate financial pressures and setting the stage for future growth. Ultimately, investors will be watching closely to see if this equity restructuring leads to tangible improvements in the company's financial health and operational performance. Alright, that is our breakdown of this hyperscale data filing. What is your take on these stock issuances and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.